Hello, and welcome to another episode of ETF 360. I'm Kirsten Chang, Senior Industry Analyst at Vetify, and today I'm pleased to be joined by Todd Brighton of Franklin Income Investors to discuss two funds in particular, the Franklin Income Focus ETF and the Franklin Income Equity Focus ETF. Todd, thanks so much for joining me.
Thanks for having me, Kirsten.
Before we get into your product suite, just want to get your overall take real quick on the equity and fixed income landscape for this year. Coming off back-to-back years of robust 20% plus gains for the S&P, are you expecting limited upside potential this year, or will the rally just keep rolling on?
Yeah, I know. It's now been, as you mentioned, two years of 20% plus returns for the S&P 500. It's now trading at 23 times forward earnings. That's historically an area where you'd expect lower than average returns going forward. On the flip side, the S&P 500 equal weight is trading, around 17 and a half forward earnings, so much closer to historical norms. So when we look at the S&P 500, clearly those expectations are quite high for continued growth and execution from those mega cap tech companies that are really the large weights and have led the index higher over the last couple of years. But below that, there really are opportunities below those mega cap tech names, particularly healthcare, industrials, energy, some of those sectors where we see valuations as a lot more interesting. We saw, quite a bit of a rotation in the market in the second half of 2024. So as we move into 2025, we could continue to see that where you might see, more muted returns at the index level, but still lots of opportunity for capital appreciation within equity securities from some of those other sectors that have lagged in the last couple of years. And then when we look at the fixed income side, despite some volatility in December, credit markets are still really trading quite tight. There's still good carry in those credit markets, but total returns in 2025 could be harder beyond that carry, just given where spreads are. But there are some areas in fixed income, like agency mortgage-backed securities, where we have spreads that are much more in line with historical averages, and those are some of the places that we found opportunities more recently.
Yeah, those credit spreads still historically tight, as you said. You launched an actively managed multi-asset ETF, that's INCM, 2 years ago that's been gathering assets. The fund focuses on stocks, bonds, and hybrid securities, but takes a flexible approach that's all about deriving income. Tell us more.
Yeah, thank you. So, INCM, which we're very excited about, was launched in June of 2023, and that's really leveraging the 75-year history that Franklin Templeton has managing multi-asset income portfolios. And this is really leveraging a similar philosophy and process as that flagship $74 billion mutual funds. It has some notable differences, really accounting to the vehicle type, but really thinks about multi-asset income investing and has a similar process that really comes down to consistent and reliable income being the first priority, taking a flexible allocation across asset classes to the most attractive sources of income, and really taking a diversified exposure to those sources of income. So we think about, we have a 50-50 benchmark, 50% fixed income, 50% equities, but we do have a lot of flexibility around that to be able to allocate towards those areas that we're finding particularly attractive from an income standpoint, as well as maintain those prospects for capital appreciation.
Got it, 50-50. So shifting gears, let's talk about INCE. Tell us more about the fund's income-oriented approach and what sets this fund apart from maybe other equity income ETFs out there.
Yeah, so INCE is income equity. It's an all equity portfolio looking to deliver a consistent and attractive dividend yield, but obviously all invested in equity securities, really looking at common stocks, at convertibles, and at equity-linked notes. It offers an attractive dividend yield around 5.5%. And when we really look at the equity market, that's 4 percentage points plus greater than what we see at the S&P 500 today, and it's 2.5 to 3 percentage points greater than a lot of other equity income funds. So we think this offers a nice balance of income above traditional equity income funds while still maintaining meaningful capital appreciation potential. We believe it should be attractive to investors who are looking for high current income in an equity ETF.
And how should investors and advisors begin thinking about implementing these funds in a balanced portfolio? For instance, on INCM, should they view it more as an income enhancing fund that can be broadly placed in the fixed income bucket, or more of a hybrid product that could supplement a core index based strategy?
Yeah, good question. I mean, typically for INCM, we do see that advisors sourcing that from both sides. So as I mentioned, our allocation for INCM being 50% equity, 50% fixed income. So most advisors will source that from both the fixed income and equity side. And as I mentioned, that dynamic asset allocation we have within the portfolio. So even with that dynamic asset allocation, if an advisor has a 20% allocation towards INCM and the fund is 10% overweight, either equities or fixed income, that's really only 2%, at the client's portfolio level. But that 5.5 to 6% yield profile of INCM can significantly impact the distribution yield at the client's portfolio. So we would think of that more as a tactical tilt for that client portfolio while maintaining that consistent and attractive income profile. So of course, it's also applicable, as a core holding for advisors, especially for income-seeking investors, given that diversified multi-asset nature of the portfolio. So really, when we think about INCM, it's high current yield while maintaining prospects for capital appreciation, really that focus on risk management and capital preservation, which we think is a philosophy which will serve investors well in markets going forward.
All right, that does it for ETF 360. My thanks again to Todd for joining us. And thank you all for tuning in to watch. We'll see you next time right here on ETF 360.